Hey guys, what's up? So in today's video, I have a very exciting company to present to you guys. This company is being called the next Amazon. So we'll see exactly if that holds true. But before we get into this video, if you guys could drop it a big thumbs up, it really helps out the channel. And feel free to subscribe if you want to see more stock related content. I cover stocks 7 days a week. And of course, check out the links down below in the description. I have a webull link where if you sign up using that link and deposit just $100, you'll get 4 free stocks. And that promotion's ending, I think, within the next week or two. So make sure you jump on that if you haven't already signed up. And so yeah, let's jump straight into the video. Okay, so the company I'm talking about is JMIA Technologies. Now, JMIA Technologies is actually based out of Africa. So they're an e-commerce company in Africa. Now, that might sound crazy to you, but actually Africa is an emerging market that has some positive things going for it. So I'll cover those things for you guys in this video. But before we jump into that, so funny story with the stock, back in June, I was seriously considering investing in this. And it was trading at $5 a share at the time. But at that time, I was looking for a value play, and I dug deep into this company's financials, and it was not meeting the requirements I was looking for. So I decided not to invest. And since then, I haven't paid attention to this company at all until about 2 days ago. And when I looked at its share price, it was $28 a share. And oh man, I was kicking myself. I can't believe I missed out on that near 600% run. But anyways, that is the past. I missed out on that run. I did not see that coming at all. But this is definitely being partly driven by the whole pandemic. There's a lot of tailwinds that's pushing e-commerce right now. So they've done really well. I missed that run, but let's see if we can still make money here. One thing you guys need to understand with the stock, it is extremely volatile. It did nothing for about a year. It traded between $2 and $5. However, recently, if we look at the 1 month chart, it was only $12 a share a month ago. Then it skyrocketed to $33. And then in just the last couple days, it's dropped 13% to $28 a share. So there's a lot of volatility here. And actually, in my opinion, I really think $28 is very overvalued. I would be more interested if I see the stock below $10 a share. And also for me, like, I almost bought in at $5, so there's no way I can jump in at $28 now. I'm just not willing to do that. But anything under 10, in my opinion, could be a good buy. But let me cover what Citron and some analysts are saying about the company. So Citron used to be very bearish on the company, and then they've had a change of heart. They now say that they have a $100 price target for this company. Now, you got to keep in mind, Citron isn't the most reliable source. You never really know what they're wanting to do. For all we know, they could be trying to pump the stock, and then they might just sell all their shares and dump it. So take this for a grain of salt. I really wouldn't trust Citron, but sometimes they have some pretty interesting things to say. So continuing on in this article, says here the Citron research has gone from bearish to bullish on JMIA, a Berlin-based e-commerce company operating in Africa. Now, Citron research flagged problems at JMIA in May of 2019 that it said included financial discrepancies, fraudulent orders, and company inefficiencies. JMIA has changed its business and seen higher adoption due to the pandemic, which is helping the e-commerce company hit for profitability in an emerging market, according to Citron. Their positioning in Africa alone should be worth minimum $7 billion or $100 per share. That's what Citron said in their newest report. Now, I think that JMIA could eventually be a $100 stock, but a lot of things need to go right for them. And right now, they're not there. This isn't going to happen overnight. And in fact, I think we're going to see a lot more pain before that ever were to occur. So moving on here, they talk about e-commerce in emerging markets. And they highlight Mercado Libre, that's done amazing, and also Alibaba, and then C Limited. All these companies are up massive. Mercado Libre and Alibaba are up 1,200% and 300% over the past 5 years. And then C Limited is up almost 500% just in the last year. So there's no doubt there's a ton of potential with e-commerce in emerging markets. It's just we got to figure out if Africa is ready for that and if JMIA is the right company. So it says here, Africa has a population of 1.3 billion people with over 520 million internet users. Either these young Nigerians will be the first people on earth to not accept e-commerce, or the stock is going to 100. Citron said, highlighting that 40% of the population in Nigeria is under 14. So there's two things in that paragraph you need to consider that are very important. The first thing, when they say either these young Nigerians won't accept e-commerce, it's a little bit more complicated than that, because in Africa, they don't have the infrastructure like they do in more developed countries. Road names and addresses aren't as clear. I mean, a lot of houses just don't have an actual address associated to it. So that's gonna make e-commerce quite complicated if you can't ship it to their house. So that is definitely going to be a short-term hindrance on the potential here. So that's one thing. And then the second thing where Citron highlights that 40% of the population in Nigeria is under 14, this is actually a huge positive thing. So one of the big problems with China and Western countries like Canada and the States is that we're in an upside down pyramid right now. And that is because of the baby boomers. The baby boomers had a ton of babies, and right now they're all entering into their retirement stage. So there's going to be a disproportionate amount of people in the Western countries and China that are going to be elderly. And elderly don't consume as much products as young people do. So there's a lot of different economists and people predicting that countries like Canada, the States, China, and Brazil down there are going to run in massive problems from this demographic problem. However, Africa doesn't have that problem. They're actually in a very good position where they have a lot of young people that are going to be coming up into their 20s, 30s, 40s, and in those ages, that's when people really consume. So that is actually a huge positive for this company. Unfortunately for us in the West, we're going to have this upside down pyramid where a large portion of us are going to be elderly, and it's very possible that our consumer spending is going to go down. But this is a very long-term trend. This is something that's basically occurring right now all the way until 2050. So this isn't something that's just going to happen overnight and all of a sudden everything's going to crash. This is a very long-term trend, but this is good for JMIA because they have this long-term trend of people coming into ages between 20 to 50 where they consume a lot. So anyways, that's my thoughts on just what Citron said. So moving on, JMIA actually did just dilute shareholders, and this could be partly why the stock just sold off 13%. They're selling about 8 million shares. And if we go over to, I believe the Motley Fool did an article on this. Yeah, they did. So why JMIA Technologies stock was sliding today. So it says here the African e-commerce company that has surged in recent weeks were getting dinged today after announced an at-the-market offering this morning, signaling the current shareholders are about to get diluted. And that dilution did occur shortly after this article was put out. So JMIA said that it had entered into an agreement with Citigroup to do an at-the-market offering of nearly 8 million depository shares. At the current stock price of $33, that would raise about $260 million and dilute existing shareholders by approximately 10%. So 10% is a pretty decent dilution, and the 13% sell-off is definitely justified from that. And the proceeds from this is going to be used for general corporate purposes. Motley Fool here talks about how this isn't unusual for growth stocks. The company is going to be using these funds to expand its business across Africa and boost investments in areas like food delivery, digital payments, and e-commerce. So really, this is something that the company just needs to do. They need to expand, they need capital. So it's not a bad thing, and it's definitely not a bad thing if you're not yet invested with them. But like I said earlier, JMIA actually isn't performing all that great, and I do believe $28 is grossly overvalued. I'd be very interested to get in if it's under $10 though, but they're not doing very good even during this pandemic. We can see here that the Motley Fool talks about how JMIA has seen revenue actually decline during the crisis. This is due in part to the company's decision to shift its business model from a first-party seller to primarily a third-party marketplace. But revenue and gross merchandise volume both fell in its most recent report, indicating the company still faces a number of challenges. So JMIA is in its infancy right now. It has a lot of challenges and problems with the company that they need to work out. So I would say this could be a potential stock that you should consider investing in, but I would wait until we see a better price. $28 is too risky for me right now. It's not an asymmetrical return that I always preach on this channel. At $5 it was. At $5, this company had pretty limited downside and massive upside. But right now, your downside is too great compared to your upside. Even if it's a 50-50 chance, it's still not good enough for me. You want the risk versus reward to be a lot more in favor than where it currently is. But I would definitely consider putting this stock on your radar if you want exposure to emerging markets, which I definitely suggest you do look into. Emerging markets are going to present a lot of great opportunities. Look for India, Africa, China, Brazil. A lot of these markets actually have a lot of great companies that are coming up. And you can definitely make a lot of money, and it is good to get that international exposure. But as far as JMIA right now, I would hold off. But like I said, if it goes below $10 and the company is doing pretty decently, then I would definitely be jumping into this. So if I do decide to jump in around that point, I'll let you guys know. But as of right now anyways, the company isn't performing the greatest, so something you want to keep an eye out for. Anyways, that's all I have for this video for you guys. Hope you enjoyed it and found it informative. Make sure to comment down below. Let me know what you guys think of JMIA. Is this a company that you would even consider investing in? And if so, what would be your price point? And yeah, anyways, thanks for watching till the end. I really appreciate that, guys. And I'll see you in the next video.